Hello everyone. A solution for Cyprus. Not necessarily the best solution for Cyprus, but it is a solution that prevents a disorderly collapse of the banking system and will keep the country in the Eurozone. The agreement sent Eurodollar higher at the opening today, but it's significant that it didn't move back to the levels of a week ago before the first bailout plan for the country was announced and later rejected. The failure to recover to that previous level suggests to me that confidence in the Eurozone has been shaken by this whole event. The affair has highlighted the difficulties of making decisions in the Eurozone and the impediments to a true single market, for example, in banking supervision, obviously. As usual, the decision came around midnight on a Sunday, which is by now a familiar pattern to people watching the Eurozone. It was at 40 minutes after midnight Brussels time. Is that any way to run an economy? Remember that discussions over aid to Cyprus have been going on for 9 months before reaching a crisis last week. And by the way, the problems of the banking sector in particular were never much of an issue for the Eurozone before they suddenly became the big issue. The imposition of capital controls in Cyprus goes against the single market concept. Why does a Cyprus-based euro have restrictions that a euro from Germany doesn't? So euro risks had faded last year after the ECB pledged to back troubled countries' debt. But these kinds of issues are likely to bring the risks back to the market's attention and reduce confidence in the single euro. That's likely to cause it to weaken over time, in my view. Now, this is the last week of the first quarter and should therefore see some position squaring. In the context of the recent market, that probably means selling dollars, as occurred across the board on Monday morning. So Eurodollar is likely to move higher today, I would think, but over time, I'd expect Eurodollar to move lower because of the risks embedded in the single currency now. Eurodollar found resistance at the 23.6% retracement of the down move that's taken place the past 7 weeks. Resistance for the day is likely to come around the 130.50 to 80 area, with trendline resistance a lot lower at 129.80 and possible support at 129.40. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.